I have a home loan, and some credit cards to pay off. But, due to the national lockdown owing to COVID-19, I will have a pay cut out on my salary for the next 2 months and am unable to pay off my dues. I have heard of the moratorium relief given by banks and financial institutions during the lockdown. So, what is moratorium all about? What is its impact on the interest rates during the moratorium period? Will I be charged a late payment fee? Would that affect my credit score?
The Reserve Bank of India issued a circular on 27th of March, 2020, to all commercial banks and financial institutions, permitting them to provide a moratorium of 3 months on payment of all installments falling due between 1st March 2020 and 31st May 2020. The period is likely to extend to a further 3 months. Do watch out for updates from the Reserve Bank on this. Simply, moratorium is a legal authorization to borrowers to postpone payment. Remember, moratorium is not a waiver of either the loan amount due or the interest accrued on the outstanding amount. It is only a deferment of payment that provides some relief to borrowers during liquidity issues. It may be due to an economic upheaval such as irregular cash flow or pay cut, or even being laid off by organization caused due to the COVID-related lockdown. The Reserve Bank of India, in its circular, has clarified on the term installment to include payments such as principal and/or interest components, bullet repayments, equated monthly installments, credit card dues. Interest will continue to accrue on the outstanding portion of the term loan during the moratorium period. Remember, moratorium implies only the deferment of payment and not waiving off the outstanding dues. And, if you choose to avail the benefits of moratorium, the interest accrued during the moratorium period would be added to your outstanding amount and you'll have to pay it on the due date falling in the month of June. Now, let's understand interest calculation with a simple illustration. Let's assume that a person made a credit card transaction of Rs 10,000 on 1st of March 2020. The credit card statement was generated on 6th of March 2020. The due date for payment on the credit card was 26th of March 2020. And the interest rate is 36% per annum. Where the credit card holder does not opt for moratorium and has paid the outstanding due within the due date, that is, 26th of March, 2020, the interest rate levied would be 0%. In scenario 2, the credit card holder does not opt for moratorium, but pays the outstanding due after the due date, say on 27th of March, 2020. In that case, the cardholder pays 10,256 rupees. That is, the principal amount of 10,000 rupees and 256 rupees being the interest calculated for 26 days from 1st of March to 26th of March, 2020. This is also in the normal course of credit card facility. And in scenario 3, here, the credit card holder opts for 3 months moratorium. The total amount due during the June statement generation cycle would be 11,154 rupees. That is 10,000 plus 1,154 rupees being the accrued interest during the 3 months moratorium period. That is, from 1st March to 26th of June 2020. And, beyond June 26th, the cardholder will be subject to compound interest and may also face other consequences of late payment fee, impact on credit score and even blocking of credit card. Here's a table on the interest rate calculation that has been discussed. So, Opt for moratorium only if you are facing a serious financial or liquidity crisis during the lockdown, else it is better to continue paying your installments or credit dues regularly. The Supreme Court, on May 8, 2020, has issued a notice to the central government and to the Reserve Bank of India seeking clarification regarding the interest rate for the moratorium. This was in the light of a plea seeking interest waiver on outstanding loan payments during the lockdown period. Do watch out for updates on this. No, you will not be charged a late payment fee during these months of moratorium. Non-payment of installments will not impact your credit score during the moratorium period. This has been clarified by the Reserve Bank in its circular, which states that the rescheduling of payments, including interest, will not qualify as a default for the purposes of supervisory reporting and reporting to credit information companies by the lending institutions. Thank you for watching the video. Please do like, share and subscribe. Don't forget to hit the notification bell for upcoming videos.